Alright guys, so welcome to this session on the ECB. Oh, there seems to be a lag. Anyway, welcome to this class on the ECB's rate decision. So, is this going to be an important rate decision or not? Is in a lot of people's minds. Why? Well, let's put it this way. You've had some bad numbers out of the Eurozone lately. Earlier, you just saw the factory orders for Germany coming out in a contraction instead of the expected increase. So, naturally, there's a concern that maybe things are heading bad once again. So maybe the Eurozone needs a rate cut. Now, a few days back, okay, not a few days back, but about a week ago, there was also an idea, there was also a note to clients that was circulated by a U.S. agency, which indicated that there are discussions once again among European officials that whether the interest rate needs to be lowered or not. So there's talk that or there are discussions that on whether interest rates needs to be lowered or not. Lately, you've had bad data from the Eurozone, which could suggest that there's a need for more money, there's a need for lower rates. What else? We also have that election. IMRC, nothing so far. We also have that Italian elections where Berlusconi was narrowly defeated. And he, again, you find that the Italians are voting for, hey, we don't want austerity. So all of this is a problem for the ECB. Okay? Now, is there sound or is there no sound? Okay. Alright. So, where was I? So again, while there is this advisory that interest rates are a topic again, while there's this concern about the impact of the Italian elections, while there is, we've been getting bad data once more from the Eurozone. The fact is, when we look at what the various ECB officials have been talking about, the ECB is not interested in small rate cuts. What does that mean? It means that if the ECB will cut rates, it's not going to cut rates by 25 BPS. It may cut rates back-to-back, 25 now and then 25 the next month. Or it may decide to cut rates at 50 BPS one time. And do we have a situation that warrants such a drastic action of a 50 BPS rate cut? No, we don't. Okay? It's not as if there's a free fall in the economic data. What we are getting has been disappointing data, but we're not getting any free fall from these numbers. And then we've got another ECB official, Hanson, and what is he saying? He's saying that price stability is more important for the Eurozone, or price stability should be the focus in the Eurozone. And to maintain price stability, you need high rates. So in short, folks, with the ECB's interest rate at 0.75%, and with the situation not that bad, there is little reason for us to expect a rate cut by the ECB today, despite the bad numbers that we've gotten out of the Eurozone lately. What else should we consider? Well, if you listen to Mario Draghi before, he indicated that well, JP, I would look at what Mario Draghi will say during his press conference. Okay? Let me put it this way. According to Mario Draghi, the main problem in the Eurozone is the question of confidence. Okay? Basically, there's a lack of confidence in the Eurozone, and that's why we have the debt crisis. Basically, so if Mario Draghi decides to talk about, or rather, if he doesn't, this is what I look for. I would look for Mario Draghi to reinforce what he said before. So during the press conference, we will want to hear Mario Draghi talking about how confidence data, these are your economic confidence, business confidence figures. He will talk about how these things are improving. And if we hear these words from him, basically he's repeating what he said last February. And basically that means that you shouldn't be expecting any rate cuts out of the ECB anytime soon. Now, if Draghi talks about how confidence is starting to erode again, okay? If Draghi talks about how the Italian elections is bringing to fore the social impact of the austerity measures, then that is going to be seen as a possible signal that some form of interest rate cut will be forthcoming in the future. So we're not going to expect any rate cut. It will be all about the press conference, and this is what we need to hear. Now, if I hear that he thinks confidence is eroding, then to me, that is a good excuse to try to look for weakness in our euro. Okay? So if you hear about, okay, because definitely Mario Draghi will not say, I'm going to cut interest rates next month. But if you hear about how confidence is eroding, if he starts talking about how the economic numbers are once again turning bad, if it talks about how the currency is a tad on the strong side, then these would be signals that there could be rate cuts going forward, and to us this would be an excuse to look at selling your euro. Okay? I'd look at your euro pushing through your swing lows at 39.66 at that point. And we take a position on euro before the rate news. I would normally want not to do anything before a rate announcement. The only news that I sometimes would trade before I hear about it would be your NFP. Because NFP, there are a lot of hints on what the numbers or how the numbers could turn out. But interest rate decisions like this, it's best to just wait for the announcement itself. And again, we don't expect that the announcement itself will move the market. Rather, we will wait for the press conference, and we would look for again Mario Draghi talking about the potential impact of the Italian elections. If he starts talking about how this brings forward social issues, the negative impact of austerity measures to people's lives, okay? If he talks about that, and if he talks about how the economic indicators are becoming poor again, and he talks about how sentiment is becoming bad again, then these three, if you hear either of those three thoughts, ideas, then that is your excuse to dump the euro. Absent that, I'm not going to touch. I'm not going to do anything. I'm not going to short your euro. Well, MRC, I'm not looking at 1.2 yet for euro, but Kiwi, or rather cable, certainly that could be in sight. Can we buy cable now, and if so, what should be the target? Okay, if you're impressed with the bounce in cable after the interest rate decision, let me put it this way. There was actually a rumor before the rate decision that it is possible that you could have Tucker or Wheel or Broadbent also voting for an increase in the APF. I know that it wasn't broadcast widely, but there was talk that these guys, again, Tucker, okay, you always look for these three guys, Tucker, Wheel, and Broadbent. They are in the middle, they're in the fence with respect to what to do next in the UK. They have a bias for printing money, but they haven't voted for increasing the APF yet. Now, again, before the release, there was talk that maybe two of these guys will vote for increasing the APF. And because of it, market was sort of depressed. Market was concerned that if they vote for increasing the APF, we're going to have a sell-off in cable. So our 80 pip rally is basically based on relief that there wasn't an expansion in the APF this time around. So to me, I'd actually rather look at the possibility of maybe getting some form of rejection in GU. The Vista, basically, that's a combination of your average daily ranges, but that's not exactly average daily range. But it's based on that. So basically, low plus an estimate on what should be the average range or what should be the range, high for the day, minus the estimate of what the range is going to be, and that's the projected low, projected high. Okay, let me take a look at our chart in cable. You know what, folks? We've been stuck under 50.77 for some time. What I'd rather look for is how will the equity markets turn out at the open of the U.S. market. Because if we have a poor performance in equities, I may just look for a rejection from that 50.78 area. Well, let me drag fibs. Oh, sorry, you're basing it from 55. At this point, I seriously doubt that we could get that. My long-term plan in GU involves getting near the 21-day EMA, near that 50 to 19 area, 50 to 50 region, whichever comes first, because your EMA line's dropping. And once I get to that level, I'm planning on just playing a congestion. At this point, let's put it this way. The UK government would be happy. Okay, guys, if you use MT4, I will release an EA that will help you hide your stop loss. Okay, I'm still testing it, but I'll put it in my website maybe by next week. If you're afraid about stop hunting, there could be a solution to that. Okay, my blog is, although you can also attend my classes at FX Instructor. So where were we? Okay, we were talking about GU. As far as GU is concerned, again, the way I look at this, UK government wants a weaker currency. They really want to revive the manufacturing sector. UK services is doing great, but manufacturing is doing poorly. So, to me, it's highly unlikely that we could pull back to those levels. The most that I would look for would be we pull back to around 50 to 50, 50 to 20 over the next few weeks. We need a major catalyst for 5,500. What could be a major catalyst? We need it. We need a UK catalyst, not okay. Because I've got some people saying Friday you're going to have NFP. NFP will come out strong, and NFP comes out strong, you're going to get GU to rally. I will point my finger to what happened yesterday. You had a good ADP non-farm data, and look at how strong the dollar got. That's the textbook response to strong U.S. data. So I'm not buying that notion that's circulating about NFP possibly pushing your GU up. Fundi-wise, I just think it's unlikely right now. We need something very good out of the UK to look for such a pullback. Meanwhile, technically, you're bearish and you're fast approaching EMA lines, and I would look at those EMA lines as a good place for a rejection and an attempt at pushing under 1.5. I tend to think that until some big issue comes out of the UK, you'll end up with a range game from 1.5 to around the 50 to 50 area. Yeah. In fact, in the weekly charts, I look at this and what am I getting? You're getting suggestions of lost bearish momentum. I'm a big bear in GU, but until you give me a weekly close below 1.5, I think for now we should be satisfied with consolidation. There's no big excuse for pushing through 1.5 at the moment. So your weekly chart tells you, I don't know where we're going. We will likely just congest. Sure, we were bearish before, but that bearish momentum appears to have been lost. appears to have been lost does not necessarily mean I'm ready to rally. Alright guys, let me get back to overview. So at the moment, small rate cuts that we want to focus on price stability. And all of those things says it's unlikely that you'll get any rate cut. If there is a rate cut going forward, it could be a big one. And the situation is not that bad, okay, that it warrants 50 BPS move. So let me just scan through what you've been saying, folks. There's some stuff that I've missed here. What do you expect about NFP? Well, you know, guys, FX Street has this survey on NFP. I was actually looking at a bad read in NFP. Now I am not sure, given how strong your private sector jobs figures yesterday. Again, ADP came out at 190 plus yesterday. So that's a very strong read. On the other hand, you hear about how the U.S. military is closing some facilities. They've delayed the deployment of some of their aircraft carriers. And that tells you that from the government side, we could possibly see a drop in total employment. But, okay, here's the rub. Your NFP is for the month of February. And sequestration only started last Friday. So it could be that those job cuts from government will happen only this month. Okay, I mean, I don't see anyone, I don't see the U.S. government already cutting jobs just because of the expected sequestration. So, what does that mean? Maybe I am wrong in my assumption that NFP will come out bad. Likely I am wrong in my assessment that NFP will come out bad. But next month, it will probably come out bad, given that government will have to slash jobs, or if not jobs, someone's job has to be cut. They're already implementing salary cuts, but that's not enough. In fact, you hear about how in some offices, the guys responsible for cutting jobs are also getting axed themselves. So, where should we go to? We're about a minute, less than a minute from our rate decision, so let's just wait for it. We don't expect anything, which means that if you actually get a rate cut, dump your euro. If you want to dump your euro, I would suggest looking at your EUR NZD, EUR GBP as potential choices. Ahmed, there are, okay, it's unchanged at 0.75%. There are data like ISM, PMI, manufacturing services. If you subscribe to ISM, if you subscribe to the data providers, they release it 10-15 minutes ahead of time. Okay, if you subscribe to them, it's very expensive. So for this data, ISM manufacturing, and their European equivalent, yes, some of the big traders already know what the numbers will be. For most data, there are instances when there could be a leak. Okay, looks like we're actually trying to push higher in euro, But I tend to think this is just a copycat reaction to how your GU moved up. The main difference was there weren't any talks about new tools out of the ECB before the meeting, the way there were talks about maybe an expansion of the APF will happen for cable. So we don't expect your knee-jerk response to sustain itself, to lead to a big rally up. I would rather, again, wait for the press conference. I would rather see if Mario Draghi will talk about Italian elections and its impact, or its his analysis about it. Okay, if Mario Draghi says, you know what, Berlusconi managed his political comeback because people are getting hurt by the austerity measures. Maybe something needs to be done to accommodate people, to try to provide liquidity without violating austerity measures. Then that's a hint for you that some form of money printing or rate cut could happen in the future. Another thing that you want to look out for would be if Mario Draghi talks about how bad the latest economic data is. Remember that he's always been talking up economic numbers for the Eurozone. But the last few weeks, we've been seeing poor figures. So if he starts accepting that fact that data is bad, then that could also be a hint for you that there will be a rate cut in the near future. And then, most important of all, is how will he talk about sentiment? Again, to Mario Draghi, the problem in the Eurozone is all about sentiment. If only people feel confident, then they will spend. And if they spend, well, you have your economy growing. So, if he talks about how sentiment is turning bad again, then that's also a hint of rate cut in the near future. But if none of these things happen, then that would suggest status quo. No rate cut going forward. Oh, he was convicted. Well, I don't know how that would impact things. To be honest, I don't know how that would impact things. But the point is, why did he nearly win the elections? It's because people are tired. Okay? People are tired about social services getting crappier and crappier. And that reflects poorly on austerity. And to address that, you need to increase money in circulation, put money into people's pockets. Well, Ahmed, remember that he promised to return the money to the people. He promised to do away with these austerity measures. So yes, if you're if you're someone who's suffering from austerity, certainly you'd probably vote for him. Excuse me. Well, there you go, guys. Your euro wasn't able to hold on to its knee-jerk reaction. Okay, let me take a look at something. You know, if there's any hint at all that there could be rate cuts, one of the things that I'd like to go into will be the following. My, how the winds have changed. Last month, I remember, last time we did this, I was looking for EUR-NZD to just continue to rally up. But instead of that happening, we've had a change of perspective, thanks in part to Mario Draghi. But what am I talking about here? I'm looking at the EUR/NZD and I'm thinking, if I get a hint that rate cuts will happen going forward, then one of the things that I would probably go into will be your EUR/NZD. There's a bit of a hawkish bias out of New Zealand right now. So any hint of a rate cut will have me thinking Kiwi should be strong, your euro should be weak. Ideally though, I would want to look for a rejection from your 21-day EMA before taking action. In the long run, I'm looking at this and I'm thinking a test of your previous lows should be in the making. Indicators are pointing lower. You do have lower highs out of your daily chart. Excuse me. Of course, guys, if they sound hawkish in the press conference later, then here's our currency of choice. Your euro yen. We've already rallied a lot in euro yen, but average range is about 180. We've been looking for a push through the 21-day. We've been looking for a push through the 34-day EMA throughout the week. Now we have it, and we're also pushing through our subsequent barrier, your 2282 area. So what am I saying? That we are bullish in euro yen, that we think we're in a position to try to make a run to 127 again. I'm not saying that this is going to happen tonight, but over the next few weeks, that will be our objective. Now, from a Fundi perspective, remember the changes that's happening here. Shirakawa just did this last BOJ MPC meeting earlier today. And Kuroda has already promised to hit the ground running as far as trying to revive the economy is concerned. How do they plan to revive the economy? By forcing people to spend money. How do you force people to spend money? Go inflation targeting. So how do you increase inflation? You print money. So the new BOJ governor, who will be replacing Shirakawa officially on the 19th, has already promised to hit the ground running. So that would be an excuse for you to look for your Japanese yen to continue to weaken. And again, if we end up with a hawkish statement, what would be a hawkish statement? That the economic fundamentals continue to improve, that sentiment continues to improve. Okay, something that sounds along those lines will be considered as hawkish, and something along those lines from Mario Draghi later will be an excuse for us to expect our euro yen to gain some more. If you look at your chart, as we said, average change is 181. So we really have room to maneuver. And more importantly for me, you're pushing through the breakout point of a previous descending triangle. So take me past 2281 and we'll be confident about the ability to rally, assuming that the ECB will remain hawkish, that there will be no discussions about any immediate rate cuts from them. Alrighty, let me get back to overview. Let me see your post again. Big players already know economic data. Yeah, we've answered that. Sometimes they do. Changing brokers every 6 months. Well, again, I'll release my EA to hide your stop loss. Oh, by the way it works is, it is possible that if you use that EA, it is possible that instead of your stop loss at, say your stop loss is, okay, say you're buying GU at 50.50 and you place your stop loss at 50.20. If you use that EA, it is possible that when your stop gets hit, instead of 50.20, it could be lower, or it could be higher. But the point is, the stop loss will be triggered, or a stop loss will be made once prices at least get to see that price point. And it's going to be a market order, so it's not placed in your broker's server. So you cannot accuse the broker of stop hunting you specifically. But again, I'll release it either next week or the week after that. I'm just making sure that it's doing its job the way it's supposed to. So I'm testing and testing and testing it. Okay, any comments, questions, complaints at this point, folks? Ahmed, it really depends on the bank. Goldman has a software that allows them to predict where market is going 2 seconds ahead of time. 2 seconds. So I guess they're using it for scalping. Some banks just rely on Elliott. You know, it all depends on who the chief dealer is, or the head of proprietary trading is at a particular office. So others will go for statistics, others will go for arbitrage, others will go for technical analysis, and others will go for fundamentals. And by the way, oftentimes you'll get the research department saying this is our view, and the trader doing something else. So banks are not one big monolithic entities. You're more likely to get a consistent view, a consistent trade from a hedge fund. Okay, the chief guy would say, this is what we will do. This is our projected direction of the market. So their traders will just try to get the best prices on the way to the target. But for the banks, there's no single approach. What's important is the trader does not burn the bank and he makes money. Well, if he wants his bonus, he better make money. Okay, so comments, questions, complaints at this point. Looks like we have close to the hour, and again, we haven't really gotten any action. So in 30 minutes time, we will have the press conference. There are only 2 sides that the comments could go. Ahmed, if you can just see 30 minutes. There are only 30 minutes before the press conference. Actually, there was a study done before that said that if Citibank will stop trading for their own account, they will save $400 million. But that was like an old study back in the early 2000s. So I won't say that they don't lose money often. They do lose money. And sometimes they lose big. The only thing is, banks do not trade on margin. So, oh guys, we ran out of time. So, thank you for joining.